Hello, welcome everybody. My name is Lars Fontinen from whentotrade.com. Today I want to give you some additional information on how to trade cycles, how to spot long and short-term opportunities, and today I want to focus a little bit on the cycle swing index, which was developed in my cycles toolbox, and I want to show you some examples here in addition to a live call on the euro US dollar I made recently. So what you see here is a weekly chart on the euro US dollar with the cycle swing index here plotted down below. So the cycle swing index is one of the fastest momentum index you will find on the market. It's smooth, it has no lag, it is very sharp, and has a lot of embedded opportunities. Well, let's go over it a little bit. So let's just review some examples. In general, the cycle swing will show you every market turn with some features, and it has very sharp turns embedded, and even it's smooth and has no lag. So you see the sharpness here exactly at this turn. So the turn exactly has no lag. It's a zero lag indicator, and even it's very smooth, so you see no wiggling around, but it has very clear and sharp turns. And this is a big opportunity or benefit you need in trading, to derive clear signals from these indicators, to have sharp turns and to have a smooth indicator with near zero lag, what you see just here in the turns, quite on time exactly with no lag. So but what's more important, that it will give you much more value if you look out for special situations. So the first situations, let's just go over to get a better understanding about the cycle swing indicator. What you see here is a classic divergence, which I just want to highlight here. This is a standard situation where you have normal divergence setting up, and this for sure shows you that here you have a lower high and here you have a higher high. So exactly at this point in time here, with no lag, you would have known so the indicator turns, and we're just processing the high here, so you know that this for sure is a short-term high here in the market. So this is the first conclusion we can draw based on the cycle swing. And now let's look to the next turn and have a look at the cycle swing. There's even a lot of information in it, because here you have a higher low. If you just compare the past two lows here. So let's just clean up a little bit. So here you have on the price data, you have here a higher low at this point in time, and if you have a look at the cycle swing, it does make a lower low here. So this is a classic hidden divergence, what it's called, hidden divergence. So it's a hidden signal. However, this is a trend continuation signal, and this is even more important because you will not trade against the trend, you will trade in direction of the trend. Because the longer term trend here, even if we have this downturn here, is we are in an uptrend here. So on the weekly chart, we are in an uptrend here. And the cycle swing signals at this point in time, so at the end of 2010 and the beginning of 2011, that the trend continuation is just around the corner. So after this drop, we would expect, based on this hidden divergence, that the market will return to its uptrend and go up. So, and this is exactly what happened. So this was a clear signal, just to go long, based on the hidden divergence here, which was shown in the indicator. And this is what I wanted to show, that this indicator, is just able to highlight every big market move here, and we can just move on and see that you will be able to get each turning point. So the next point comes here, and even this was signaled by the cycle swing. So here we have a lower high, and here on the cycle on the normal price we have a higher high. So again, we have a classical divergence setting up, and if you compare this in time, so the divergent you would be able to see the divergence right at the bar, so there's no lag. So as with classical divergence indicators, you are only able to see the divergence very late when the price already dropped a lot of times, and normally you will not be able to trade the divergence signals. But with a cycle swing with no lag and this sharpness here, you will be able clearly to see the divergence right on time. So what you would have been seeing here is the next signal by the cycle swing, just that we would expect the next downturn. And the other thing is that you have a triple divergence here. So this was the first and this is the second one. So you have a big divergence setting up, so you can expect a major turn to occur here, which just took place in the beginning of April here. So however, let's just move on to get the basic understandings of the cycle swing indicator. So the next interesting, or the next major turn, just occurred here end of 2011 with this down here. Or there's no signal here, so we won't see any signal here. This is standard behavior, which a lower low here comes up, lower low, lower high. So no signals here at this point in time. The next signal on the cycle swing would have been shown up exactly at this point in time here, where we see the next divergence. Just price is making a lower low and the indicator here is making a higher low, which is again a classical divergence. And here you see again the sharpness of this indicator. Even it's very smooth, but then it just turns up right on time on this low here. So there's again no lag, but a sharp upturn. So you are able to see this divergence and this sharp turn just with the eyes at the point in time. So with no lag here and a very sharp, clear turn. So at this point in time, yeah, we would have seen a clear divergence, which would shown us the next upswing here at this point in time. And now let's come to the point of interest, where I wanted to go a little bit more into the details. So on February 24th, where this chart ends, we see the next important situations, which is just showing up. So market turned up, and what we see here is we have the next hidden divergence. So the market made a lower top, or is just in progress of making a lower top than this one here. And the cycle swing already is making a higher top here. So this is another hidden bearish divergence in this case, which again is a trend continuation signal. So from the longer trend, we are now in a downtrend here, and this upturn signals just we can expect to trade in the direction of the trend somewhere here, for example, during the next 2 weeks. So we would expect the turn to show up here, because the price will not be able to go just above this top here just in the moment. We are on a very high situation on this indicator here, and it's already making a higher high. So we would expect the trend continuation signal somewhere here. We cannot trade, we cannot time the trade just exactly here on the weekly chart, but on the 24th of February we are alarmed right now to expect the next, or to the downtrend to come back just during the next days here. So we are warned, and now we can switch to the next lower time frame just to make the exact timing. What I wanted to show here, just to give you an understanding about the cycle swing. So the cycle swing was able to show you every major turn on the weekly chart by the hidden and normal divergence I've shown you. And the difference to normal indicators is that you can trade divergence with this indicator because it has no lag and it's very sharp, and it has smoothness around these turns, as you have seen here and here exactly, with no lag on the chart. So you will be able to see the divergence right on time and not too late, and you will be able to trade them. So this is just to give you some understanding about how to use the cycle swing indicator with different indications, and as seen here on the chart, it's able to show you every major turn on the market here if you're able to read it. However, I just wanted to show you this example because in the Traders World Expo, which was just some days after this analysis, I showed you analysis on another indicator. So this is just a live screenshot from the Traders World Online Expo on the 28th of February this year, where I presented live the Cycles Toolkit for an audience about, yeah, I don't remember exactly, about 200 traders who are live, and this presentation is available via DVD. So I just did a screenshot here out of the presentation. So this was live, and I showed with another cycle tool, the dynamic cycle explorer here, that the dominant cycle exactly on February 28th on the daily, this is the daily chart of the euro US dollar pair, so showed us that we exactly on the dominant cycle top. So this cycle was able mainly to spot every turn during the last year. If you want to review this dominant cycle analysis, I will just recommend go to my webpage and review some videos. There you will be able to review what this dominant cycle is about. I just want to highlight that even a week before this date, you would have seen on the weekly chart that we would expect the longer downtrend to resume during these days. And in addition, now we see a dominant cycle top. So we have two major signals now from the weekly chart and the daily chart with two different cycle indicators which have projected a top. And in the live presentation, I said clearly that this is the ideal situation to go short in the market, and I did this live. And this is no cherry picking to show something here. This was a live call I made. And in addition, this is also I want to tell you here, if you put on the cycle swing indicator at this exact time on the 28th February, you would have seen a regular bearish divergence from the cycle swing here. So what you have in this public call, this is just the situation of my presentation here, where I said this is the ideal situation to go short in the euro US dollar. We had a weekly downtrend continuation signal from the cycle swing, which I showed and explained in the beginning. We had a daily bearish divergence of the cycle swing indicator as shown before, and we have a daily dominant cycle top. So you have three major indicators signaling exactly on this day that this will be a big cycle top in the market. And this was the reason why I told in this public call that this may be a great situation to go short. So this is just an explanation why I made this call in the public, and perhaps you will get some nice information on the cycle swing here. So today you see how this all played out. I think one of the best calls during the last 2 months could not have been better. I called the top exactly to the day with my cycle indicators, and again this was just a live real-time example where I've stand up in the public and made the short call. So this is no review or backtesting. So thanks for listening. Review on the cycle swing, so which is another nice confirmation tool. And if you are interested, go to my homepage, watch some videos, or for sure all this knowledge is available in the book. Thank you and bye.